There are 5 key things that I would recommend doing when you're planning to start the process of looking at a mortgage. And these 5 key things will help you get ahead of the game and help you understand things and help you get into the right place and into the right position where getting a mortgage should be easy and straightforward. And the first thing that I would recommend that you do is look to get a copy of your credit report. I would recommend getting it from Check My File. Check My File is a multi-agency credit search, and this will be able to check Experian, Equifax, TransUnion. It does a Crediva check. It also does a CFAS check. It checks for a history of bankruptcy, CCJs, but it also shows you every search that you've done in the last 12 months across all of the agencies. And this is key for understanding what the lenders are going to be seeing when you are applying for a mortgage. Because there's multiple agencies in the UK, different lenders will use different agencies, and it's important to have an understanding of everything that's going on, and your Check My File credit report will do that. There's a link in the description here. It is free for the first 30 days, and then it's $14.99 a month thereafter. You can cancel it at any time, but I would always recommend, and I get a copy of this from every one of my clients. It gives you a good understanding of what the lenders will see, and it allows you to review potential issues that could crop up. What I would also recommend is sharing this report with your bank or with your advisor to get a professional opinion and help. It can improve your chances of being approved, and it can avoid future issues early on in the process. A key thing that I would suggest as soon as you download your report, check your name spelled correctly, check your date of birth, your address, make sure that you're on the electoral register, make sure that you're checking any financial associates, make sure that what you've got on your credit report actually belongs to you. These are key things that you need to understand, because if you know that they're there and they shouldn't be, you can combat that and you can get that reviewed early in the process. I had a client reach out to me, and when I was reviewing their Check My File report, the date of birth was completely wrong. When I spoke to the client about it on one of their accounts, it turns out that that wasn't even their account. It was their dad's account, who just shared a very similar name, and it just for some reason pulled through on their account. And the lenders are going to see that, but they're not going to look at it in that much detail. They're just going to see that that's a credit facility outstanding in their name, and that would impact them when getting a mortgage. We were able to combat that right at the very start and get that removed from their file. What I would also say is make sure that you're using your credit responsibly, stay within your limits, make your payments on time, and avoid any major changes in the lead up to doing any mortgage application. The reason that I would suggest that you avoid any major credit changes is because your circumstances when you're applying for a mortgage are based on what's going on at that time. So I'll just use an example, and it's a debt to income example. So if you've got, say, a car loan at £300 per month, and you've got £3,000 outstanding on it. Say you sell that car, get enough to pay off that £3,000 loan, and then you go out there and reduce your monthly expenses by taking out a car loan at £10,000 at £200 a month. That would all be fine because it's increasing your cash flow if common sense played the biggest part. However, some lenders will actually use what's called as a debt to income ratio. And the way that some lenders will approach this is your actual overall exposure to debt is increasing. So although your monthly commitments are coming down, your overall exposure is going from £3,000 to £10,000. So that's an extra £7,000 worth of lending that you've got. Some lenders aren't interested in the monthly payment side of things. They'll be looking at, well, they will be, but they'll be also interested in your debt to income ratio. So make sure that if you're planning to make any of these large changes, consult an expert like a mortgage broker or your bank before you go and do that. Staying within your limits is also key, because if you go over your limit, even if it's just for one day, that will flag up on your credit report as well, being late for one day. So just make sure that you're using your credit facilities responsibly. What I would always recommend as well is to close any unused accounts. This will protect you against potential fraud. If you've got an account that you're not using, you're probably not keeping an eye on it, so you won't know what's getting used and what's not. I would recommend closing this down, because it then reduces the risk of fraud, of someone getting access to that and spending money and you not being aware of it. It's also easier to manage accounts if you are keeping an eye on them, so I would always recommend closing them down. Now, you might hear the argument, well, if you've got a £5,000 limit and you close that down, it's reducing what's known as your exposure to debt, but it also could mean that if you've got £10,000 worth of total lending, but £5,000 on a credit card is sitting empty and you close it down, you could be utilising more of your credit. So it might be an idea to spread that out and make sure that you're not reducing your credit utilisation. But I would always recommend, if you're not using something, to close it down. But that's the 5 key things that I would recommend to help you get ahead of the game. So get a copy of your credit report, share a copy with your advisor or your bank, check your personal information is all correct, use your credit responsibly, and close any unused accounts. I hope you found this useful. As always, if you do have any questions, fire them in the comments or ping me a message over. And don't forget to subscribe for future episodes.